Great. So thank you, Yemi, Hikmet, Vimal, and Sirak. Maybe we can start asking Director General Hikmet about the work ABE is doing. Maybe you could enlighten us a bit further on how the ESG work is going to be integrated with the work of accountants and auditors in the financial reporting and the footnote disclosures that will feature in the financial statements.
One of the things we're doing now is actually updating our law. I mentioned in my presentation that the proclamation of ABE was enacted in 2014. So in terms of our African peers also, which we have a close relationship with, we might be one of the first to update our laws to give mandate to ourselves, basically, to assure ESG guidelines in the country. So that's one. So we're updating our various laws to enable us to do that. Not only corporate governance, like I said, ESG matters. The other one, I think, is the fact that we have partners, the development partners willing to help us. IFC is one of them, to actually develop the code. So we'll be looking at further implementation of the code, and one of the biggest gaps would be capacity within the ecosystem. Like mentioned earlier in the various presentations, we need capacity at the reporting entity level, at preparers of financial statements, as well as then at the regulatory levels, be it the Capital Markets Authority, the National Bank for Financial Institutions, and others, including us, to make sure that we have the capacity to actually review these disclosures that are now, the non-financial disclosures that will be necessary. I think I'll leave it with that.
Thank you, Hikmet. I'll direct the next question to Sirak. He's been waiting for this for quite some time, and we've had a side chat about it a little earlier on. So, Sirak, tell us, how is ECMA integrating ESG into the regulatory framework? Also, if you could tell us about what are the implications of ESG for the Ethiopian capital markets? And then feel free to also, talk about if this is the right thing for us and how to do it.
Okay, since I wasn't a panelist, maybe I'll get 2 more minutes. Yeah, 2 more minutes to talk. So obviously the Capital Market Authority is a new institution under the Capital Market Proclamation, and our basic kind of mandates are in line with international requirements for capital market regulators. Investor protection, reduction of systemic risk to the system, financial system, creating kind of a transparent, viable market, and then fourth, development of the market itself, because we don't have a regulated capital market in Ethiopia. So having said that, I think our take on ESG is to make sure that ESG, our principles on ESG, are aligned with our 4 mandates. And I'm going to try and show you, I honestly believe that they're actually aligned with these 4 mandates. So I'll start with the governance part first. By the way, I think we kind of overcomplicate these words. It's much easier for me, as an Ethiopian who grew up in Ethiopia, it's much easier for me to look at these words in Amharic. It's an easier sell, I think. Akababi. ማህበራዊ ተኮር መልካም አስተዳደር ዘላቃዊነት. I think it's much easier to sell. If I'm selling environment, we want companies that have very small impact or minimal impact on the environment that they work and serve in. We have they're planting trees, they're minimal impact on the environment generally. ማህበራዊ ተኮር. Okay, so companies, their interests are aligned with the community they live in and work in. It's in our culture to be part of the community that we work in. All our companies support their employees, and then they support tens and hundreds of people behind them. This is our tradition, our culture. I think it should be sold to us as that. And then Malkam Astadadar is Malkam Astadadar. I mean, who wants Malkam Yalwana Astadadar? You know, it's easy. I think that's fairly easy to sell if we can present it in that way, make it a local, that this is what we live in, you know, as a environment. If you look at what the government has done the last 4 years in terms of, I mean, we can argue on the number of tree seedlings planted, but we are seeing a more greener Ethiopia. So government policy aligns with the ESG policies we're laying out. In terms of social, Mahabarai Takor, I think this is, our culture is that. We're not individuals living in like secluded, it's very hard to sell. For instance, in the country that I half of myself grew up in and I come from, the US, it's much harder to sell social because they believe that everybody's themselves, they live in a kind of a box, each individual to himself. We don't have that here. We live in a community, family-oriented, much easier to sell. And then governance is governance. You know, it's the basis of what capital market authorities do. So I'll focus on governance here. So kind of the 4 mandates and how they relate to governance is governance basically is kind of how the board, an independent board, runs companies, 1. Number 2, the board looks at and makes risk assessments for the company, an ongoing risk assessments, including financial risk, business risk, all those kind of standards, right? The other one is kind of, we have a board that is accountable and transparent to its shareholders. These are kind of standard values of the share companies that we want to make public. And then lastly, maybe integrity and honesty as a foundation of our boards. So, I mean, it's easy sell if we make it very simple. I mean, I think that's the way we should present this to the public and not some kind of something else coming from overseas. I think we can own it and make it ours, and it can be sold that way. So in terms of just a minute on what we are doing as an authority, so basically our public offer directives, which will govern how public company share companies can come into the market, and then other issuers, debt issuers can come into the market. That directive will have a provision that will require issuers to actually abide by certain ESG related principles, mainly focused on governance, but will have a portion on E&S as well. So we're working with our development partners, including the IFC. An agreement should be signed the next couple of weeks. We're on the panel that is working on the panel that is the ABBE panel, so we're working with them. So obviously, you've seen that they're IFC supporting 3 different layers of organizations. We want to make sure that all those requirements are aligned. We don't want 4 regulations. At the end of the day, our principles should be based on what ABBE is going to have in the terms of the code. So that's what we're working on. Thank you.
That's a good response, and I'm glad that you started to introduce some of the Amharic words into it. I was challenging myself. Climate mitigation, የአየር ንብረትን ተጽዕኖ ማሳነስ ወይም ደግሞ መቀነስ adaptation የአየር ንብረትን እንደገና መለማመድ መለወጥን መለማመድ ማለት ነው. I think we need to mainstream this thinking in our own language, and the only way we can disseminate it to the wider audiences by owning it through our own language, and thank you for that. So my next question is for Nomsa. So question for Nomsa is, I know you're supporting, IFC supporting the efforts to integrate ESG into the economic development plans, but tell us how it can help mobilize domestic and global private sector investment into Ethiopia. And what are the implications? In particular, tell us about what does the impact of country risk mean, and how do you overlay ESG adoption into helping reduce the cost of funding to Ethiopia? Nomsa, take it away.
Thank you very much. I think just on your first question, I think around mobilizing both, I think, domestic as well as international activities, as well as investment into the private sector, and how ESG is really central to that. I think obviously I mentioned that prior to joining the IFC, I worked for a private equity fund headquartered in London, investing across mainly developed markets, but also emerging markets, including onto the continent, and increasingly wanting to invest onto the continent, and have also worked in consultancy. And I think across my career, I've seen that, and I think a couple of speakers, Anne in particular, mentioned this, that one, ESG, I think, is no longer seen as something that is philanthropic, or is a CSR activity. And that's something actually the IFC talks a lot about with their clients. I think it's core to the business, it's core to your strategy and your operating model, and it affects your financials. So I think we've seen a great shift in the trend there, particularly after COVID. I think people really woke up to the fact that this is really important in sustainable development, both in emerging as well as developed markets. And then I think when you look at capital flows, I mentioned, for example, I worked at a private equity fund before I joined the IFC. And for them, really, actually, sustainability was a key lens through which they decided where they would mobilize their capital and where they would invest. And in some ways, actually, the IFC was used as a benchmark, particularly in emerging markets. But you would see how, both from a Western markets perspective, that investors, pension funds, private equity funds, hedge funds are asking questions around what is the track record of the companies or the underlying funds that we're investing into from an ESG perspective. And also, I think you're increasingly seeing that on the continent. I've worked across the continent for many years, and I think, again, markets have developed. I think Anne, as well as Sirak mentioned, I think the development of capital markets in itself and how you integrate ESG is really important to that. And I think IFC has always seen that as central. The IFC have something called the IFC performance standards, which are 8 performance standards, which have taken many, many years to develop and to be reviewed by internationally global experts, but are specifically on different components of environmental and social. And we also have a corporate governance toolkit and methodology, which is used to assess investments. So it's really, I think, to answer your question, I think it's really important that we also see, when we're thinking about clients, that we also see that they're taking ESG seriously. We recognize that people are at different stages of the journey. So we have a lot of clients we work with that, including in Ethiopia, that haven't started on the ESG journey, which is fine. And in some ways, it's actually more exciting to be able to work with them. And then we have clients that are further along on that journey. So, but I think the point is the commitment has to be there. And that's where it's really important in terms of how you're seeing capital flows coming into the continent and also in Ethiopia. And then I think in terms of the second point, second question around country risk and overlaying ESG in that, and also the cost of financing, I think it's pretty important. I think, again, non-financial risk and not the quantification of non-financial considerations, which essentially is ESG, is I think now globally accepted that is important, but that's also factored into how you make investments and the cost and the price of your investments. I think I worked in Ethiopia for 15 years on the ESG front, and I've seen actually across the mining sector, the agribusiness sector, hospitality, healthcare, the position that particularly international investors take now of how they integrate, okay, how are we looking at, for example, Ethiopia as a whole, country risk profile from a climate change perspective? You know, how effectively is the government as well as non-government entities managing that? How is, I think labor has been a big consideration. I've worked a lot on labor considerations in Ethiopia. For example, looking at how do you define a floor for minimum wage when there isn't one? Because these are the kind of questions that get asked by investors. And those are the kind of things I think from the IFC's perspective, as well as the World Bank, do get considered and overlaid into country risk as well. Because, for example, if you're not thinking about how you're managing your labor force, that presents risks on your return on investment, if I speak from a very commercial perspective. So I think ESG is really important in country risk. And I think the more effectively it's managed, the more effectively you're managing down the cost of investing.
So my next question is for Yemi. I'm going to put a context to the question to tell us what are the best practices for business in Ethiopia to disclose ESG performance. In particular, like I gave an example of how cow burping contributes to release of methane and greenhouse gas emissions. Tell us about like what are the ESG standards and how do we implement the greenhouse gas emissions like in agriculture, forestry, and other land use type of investments that we're looking for. Let's take it away.
Fantastic. Thank you. So what has happened over the years is we've had a few reporting frameworks rise to the very top. So if you think about the consolidation that I mentioned earlier, it's led to a few frameworks actually standing out. And I think the key frameworks we have are the GRI, the Global Reporting Initiative. We have the TCFD, the Task Force on Climate-Related Financial Disclosures. And we also have one in the works, the TNFD, the Task Force on Nature-Related Financial Disclosures. We have the IFRS S1 and IFRS S2 as well. But those, I would say, are the big play standards when I think about them from a corporate perspective. And the way to then think about them when it comes to climate and emissions and all of that is you will find that all of them have requirements for that to be captured. So you have your scope 1, your scope 2, and your scope 3 emissions. For example, if you look at the ISSB standard, that's one very robust standard, and I think like Anne referenced when she presented, the ISSB is the future, because if you think about it, it actually incorporates a lot of principles, including the integrated report, which is a very fantastic principle on integrated thinking, you know, which organizations have to first embed before they begin to report. But having said that, when it comes to your emissions, one of the things we'll need to think about as we go about with the codes is scope 1 and scope 2 will probably be fairly straightforward. But scope 3 you would find would require some heavy lifting. And if you think about it, my scope 3 is someone else's scope 1 and 2. So the question then becomes, how do I get the entire value chain that my organization is involved with to begin to report? And we are seeing businesses do that. So what are some of the examples? For example, we've had organizations actually begin to sensitize their suppliers, which is where that information is going to come from. So we've had organizations set up avenues where they engage suppliers and they actually help them understand what's coming, the sort of information they will require. And in most instances, suppliers are ready to comply because they understand the implication of non-compliance, because it means the money will stop flowing. You know, so they normally would comply, and those suppliers usually are the drivers of many economies. They are the medium, small enterprises. And we're also seeing, for example, like in Kenya, where regulators are equally thinking about how to support SMEs to capture that data regarding emissions. So that also becomes very, very important. The final thing I would just mention here is other aspects to equally consider is ensuring that you are applying the right framework from a reporting standpoint, a framework that is suited to your organization, and then also ensuring that you perform your materiality assessment. So your materiality assessment is actually what tells you the material issues to report on. So the material issues will be things that impact your ability to achieve your strategy, either by enabling or preventing you from achieving your strategy. It speaks to aspects around funding, aspects around sourcing, aspects around practices, talent, culture, and all of the things you do across your organization. And I think lastly is ensuring that there is proper assurance. And I'll give an example why that's important. So if you think about the emission space, when you capture and report scope 1, scope 2, and potentially scope 3, remember you are putting that information out there to the market. The market is going to be relying on that information. For example, where we see where things are headed with the carbon reduction, carbon markets coming through, a lot of that is going to rely heavily on the ability to verify the information you've put out. Markets are going to actually work with that information. Your ability to actually unlock value, unlock funding, or raise money using carbon requires you to also assure those elements. So I think what the DG spoke about becomes very critical as well. So it's not enough to measure and put the colors and put the numbers. It's actually take a thought to think about what does this mean for my organization? What value does this bring as well? And how do I work around assurance so I build credibility when it comes to my brand promise and my reputation in the market? Thank you.
My next question is to Vimal. Vimal, perhaps you could tell us a bit about what ESG presents as an opportunity to Ethiopia, and then what are the best practices for business to improve on, to adopt. And then also you could add to that how FSD Africa could help promote ESG awareness and adoption among business investors in Africa.
Thank you very much, Fassil. So I think in terms of opportunities for Ethiopia, so I always look at opportunities in this way. Opportunities are always there. The question is, are you creating them to bring them to the market? Because opportunities are just lying, and if they're not being brought to the market, then those opportunities don't become opportunities anymore. And that is the way opportunities needs to be looked at. So for example, if you look at capital raising, which is attracting private capital or even public finance through international markets, you need to have innovative products brought into the market. So innovative financial instruments, not the conventional ones. So for instance, if there are sustainable instruments which can be brought into the market, and you have regulations which are also allowing for some certain kind of incentives, then those opportunities can actually materialize. The resilience of the economy is also pegged on a lot on ESG. So institutions who are adopting or owning ESG guidelines or standards are actually reporting better performance compared to others. I think one of the previous presenters gave us a graphical presentation of that, which ensures corporate sustainability. So that is a very big opportunity, especially for Ethiopia, where the population is really large. It is a growing market, and it is growing really fast. But it needs the right kind of capital to be attracted into the market. But without the right kind of products, that is one, and the right kind of partnerships, you cannot execute or implement those opportunities to become actually fruitful for the Ethiopian population. I think the other thing is also to have a savings culture. So investment policy statements, especially for the pension sector, should encourage savings in the market. And there's a lot of emphasis on ESG, not only by international investors, but also some locally pension fund managers who are investing in Ethiopia. So that savings culture actually builds retirement income. And that is also ensuring sustainability. We have seen many instances in Africa where people who retire, they don't have money to sustain themselves. They have to rely on their children or relatives to provide them for some cash for their just daily needs. So those kind of opportunities can actually be catalyzed and scaled up. They can also be replicated in other parts of the market through the ESG agenda. And then last but not least is on the gender side. We usually forget the gender aspect of this, and I'd like to give an example in Tanzania where FSD Africa supported a gender bond, and we raised more than 30 million USD, and all that amount was actually used to finance women businesses. And these businesses have been growing. They have had an impact in the last 12 months. We actually supported the impact reporting, and you can see the difference it is creating. A lot of capital is being attracted into the Tanzanian market right now because of that from foreign investors. So that is on the opportunities, and then how FSD Africa can come and play a role. We are very much catalytic, and we would like to support development of guidelines or regulations and build the ecosystem. So in Ethiopia, we are working with CMA. We are also looking at developing the Ethiopian Securities Exchange, which is in the process. We are also developing the pension fund strategy. So all this we can support. We are also looking at supporting new products into the market, which can yield transactions that can actually raise capital. So far we have done a lot of transactions in Africa, Kenya, Morocco, Tanzania, and in some other parts of Africa. We are currently working on a very huge pipeline and looking at raising of more than $200 to $300 million just this year. So that is the way FSD Africa can come. We can bring the expertise. We can provide capacity building and awareness as well, because this is a new concept. It's not easy for everyone to grasp it, but through live case study examples, this can be easily be done. So I will really encourage the Ethiopian market stakeholders that the opportunities are there, but you have to create them and bring them to the market. If they're just lying, they will not really benefit anyone, to be honest. But if you bring them to the market and it is going to actually create an impactful transaction, then more transactions can come, because there will be a proof of concept in the market. People will look at, okay, yes, this was the first one. It was successful. We can follow suit. And that is how we can build the economy. Thank you.
I would like to open it to the audience to ask questions. I'd like us to have a gender parity as part of the S effort, and I encourage our female participants to ask questions.
Thank you very much for the opportunity, and I would like to thank the panelists as well as the organizers for a very useful session. I'm Medhin Fisaha from the Global Green Growth Institute, seconded to the Ministry of Planning and Development. And my question goes to the presenter from IFC. So in the public sector, as you're very well aware, we have environment and social safeguard frameworks. I think the ESG guideline that you're talking about is something similar to that. So I need your confirmation or reflection on the similarity and the difference. And the other one, in the public space, in addition to the framework, we have ESS screening tools, and also the environment and social management plan, ESI, depending on the risk category. So the major problem is implementation and enforcement. So my question is, in the case of the business sector, what are your plans, in addition to developing the guideline of ESG, what are your plans for putting in enforcement mechanisms? And yeah, these are the questions.
Thank you very much. My name is Ibrahim Zaidi. I was a former director of Commerce Monetary Institute, which is based in Nairobi. Now, currently, I am a consultant. I have one question related with data. Data availability is crucial for monitoring and measuring ESG performance. What international initiatives are in place to assist developing countries to ensure that they have appropriate data infrastructure?
Thanks for the organizer, FSD Ethiopia, and all the panelists. It was a very helpful and insightful presentation. My name is Tamru Balaina. I am from Ethiopia Investment Holding. It's very good session to understand about ESG in general and some of the process and the reporting standard. Even though there are many international regulatory requirement and investor requirement and some stakeholder expectation, as noted in the panel, that requires company to comply with ESG standard. We can also understand how impactful and to make business sustainable, how business can help in all this process. So that's insightful. My question and maybe clarification is for the IFC representative, Nomsa. It's helpful that it was mentioned a certain action is needed for ESG standard, and IFC is collaborating with a working group mentioning ABI, Bankers Association and Chamber of Commerce in establishing this standard. According to the key date shared by Nomsa, they have given themselves 8 months to come up with the ESG code for Ethiopia. It was also mentioned that they have implemented similar program in 6 African countries. So my question is on the working group. The current working group selected, that is one from regulator and the association and the Chamber of Commerce, is that similar trend you adopted when implementing this program in other countries? Because my fear is that I felt the public sector is not represented. And it may, because the outcome of this code is going to be applicable for all firms, and whether it is mandatory or voluntary, it's impacting everyone. So how participatory the process is going to be? And when you create this standard, is it going to be a one standard code for all, or you mentioned some sectors, but it was also mentioned in the panel we need to have one standard taxonomy to report or ESG standard. So are you creating one standard versus sectoral based ESG code? That's my question. Thank you again.
Okay, I would also like to thank those who thought, planned, designed, and promoted this program overall, as well as the presenters and the panelists. I was very much comfortable with all or with much of the presentation that has been going on, but there is an area which I couldn't get comfort, which I want to ask for the purpose of clarification. Any subject area like ESG, when it develops, I know that it will not develop from scratch. Any idea, any program normally evolves and develops from previous disciplines and previous activities. I myself, I didn't tell my name, I'm told I'm an environmentalist by profession. I work for an environmental firm, independent firm. So the kernel of my question is, I'm worried about how ESIA is treated by ESG. Any new coming discipline or subject area evolves, develops. So, you know, I'm working on ESIA for the last 40, 30 years, maybe 30 to 40 years. And what has been discussed here, much of it, more than 90% of it, comes from the subject of ESIA. In fact, we have not only environmental and social impact assessment, we have also strategic plans, environmental and social strategic planning. So if I give you the precise definition of ESIA, it is about the impact of the project on the biophysical and socio-economic environment. It addresses all the points that have been raised here. But it started in 1970. But no one has given any trace, any background explanation about how ESG has grown or evolved from ESIA. We need to give credit to subject areas, you know, because I have seen nothing except the last presenter, which mentioned about environmental specialist. Much of it was given to us as if it has come from the scratch, as if it is a new science and new discipline. So it's good to give credit to the subject area. Let me give you one. For example, we discuss baseline assessment. If I give you the table of contents, we discuss project plan and description. We discuss policy, legal, institutional, and framework. We discuss stakeholder consultations. We discuss environmental and social management plan, monitoring plan. At the end of the day, we give capacity building and recommendations and conclusions. So what I try to say is, please, let's give credit to ESIA, which has been developing and evolving and developing starting from the 1970s in all our write-ups, in all our write-ups, in all our discussions, let's say how this ESG has developed. In fact, myself, I promised to work for the guideline because I know that my experience in SIA will contribute a lot, will contribute much. Now I'm a member of the committee. So this is my reservation.
Thank you very much for really inviting for this very important discussion. I really enjoy that there is a wider partners, stakeholders who are really important for engaging environmental and social issues into the development and also considering sustainable development aspirations of the country. From the very beginning, I would like to just inform you that Ethiopia is I can say, a very pioneer in just at least formulating policy strategies and guidelines or whatsoever the case in ensuring sustainable development in Ethiopia, because Ethiopia has already launched, has already formulated or just enacted a lot of environmental laws and also policies, strategies in all components of, I can say, the environment that's related with climate change, chemical management, hazardous waste management, and also natural resource management, and so forth. So, my just comment or suggest, just want to know more from one of the presenters who actually, I think Vimal Parma, because I am very interested that he acknowledged some of the African countries who are advanced in ESG, but I didn't heard nothing about Ethiopia's advancement in adopting those international standards, national laws, policies in So my question or wanted to clarification from him that do you mean that ESG is something different from Ethiopia, environmental impact and social impact assessment, or is commonly from the development partners that ESS, that's environmental and social safeguard? I would like to really know the exact difference between ESS and ESG, so that all the participants of this workshop could take note of what really is being under development or just under progress or under implementation in Ethiopia. What is really the real gap in Ethiopian case, while other countries such as, or that was acknowledged by the presenters, South Africa or other countries who are adopted those standards. So I really appreciate to know that one, because Ethiopia is very, very keen to achieve green growth, sustainability, and so forth. I would like to again thank you for just having this discussion. I just love to be part of this discussion. I will promise just right now to engage in the next session, because this is a very inspiring discussion here in all its forms. Thank you very much.
Thank you, Mansour. So I'll allow each of the panel to take 3 minutes to respond. Let's start with Nomsa, because she's taken a lot of questions already and has been taking notes. Nomsa, are you there to start?
Yeah, sure. So I think there were 2 main questions addressed to me, which I'm happy to answer. And also, I think Sirak is taking the ESIA question, but happy to add on to that, because I think that's something that was raised that was an emphasized point. So I think on the first question that the lady presented, I think on the point around the public sector and the existing safeguards that are in place. And the question really was around how similar or different will the ESG code, as well as the ESG guidelines that the IFC is developing in partnership with our key partners. I think the answer is, obviously, one piece of this work is to look at what is existing, both from a global and a regional perspective in terms of what is best ESG practice, because obviously we want to replicate or emulate that. But also, I think what's even more important, and I think this has been very strongly emphasized by working group members as well, is that this has to be specific to Ethiopia. Otherwise, it's not effective. So it's also about what are the existing practices, standards, and regulations that are in place in Ethiopia. So that is also why I mentioned that I think, you know, involvement, for example, from National Bank, but also from the Environmental Protection Authority, as well as other key authorities who are responsible for managing particularly environmental and social affairs is really important in the development of this. I think the second point I would make is that really what we will be doing when we're drafting, so it's a collaborative effort. The working groups are really leading on the drafting of these guidelines as well as the code. But as I mentioned, I think something that's very important and speaks to actually the second question that was raised is that I am very keen, I think, as leader of this program, that it is a inclusive and participatory process. So we do want to make sure that the draft of both the code and the guidelines is shared for public consultation, so that people are able to review and comment on it. And we also have someone who's working with us who's developed guidelines globally. That will be providing technical input. So I think to answer the question, it is very much that the guidelines in particular will be similar, I think, to the existing safeguards. However, the difference is that these will focus on the private sector, not the public sector. So there are overarching principles that will be similar in the principles of ESG. However, there are differences in how the private sector is responsible for how they implement standards as well as guidelines. So that is where some of the difference will come. Also because for example, if I compare the World Bank, which is the public sector arm of the World Bank Group, and the IFC, which is the private sector arm, we have similar standards. But what we ask governments or public sector is quite different in terms of responsibility of what we ask individual companies or financial institutions. So this is where I think you will likely see the difference between, for example, existing public sector safeguards or standards. But as I said, I think the similarities will be to make sure that the code and the guidelines that are being developed take into account the existing safeguards and are following the same principles. I think the second part of the question was around implementation and enforcement, which I think I very much agree. I always say when I'm working with clients, a paper is just a paper, which can be thrown in the bin, or it can be saved on a laptop, and the rest can be history. What's important is actually how you take a paper or a document and you implement it. And that's why IFC's program is actually not just focusing on a regulatory level, the market level. And when I explained that there's the regulatory level, there's the market level, and there's what we call the firm or the company level. The market level is really about looking at market capacity building. So that's whether we're taking, for example, in other countries, we've worked with industry associations, but we've also worked with consultants in the market to do training and certification programs, because the enforcement actually will come down to, for example, do you have the right consultants in the market to help companies implement the standards that we're developing? And I think from an enforcement perspective, I mean, again, that's why very much we've partnered with bodies like ABE, who I think have a key role actually from a regulatory perspective, but also from being able to audit and see whether these things are actually being implemented and how do you enforce them. So that is why we're taking a three-level approach. It's not just regulatory and development of guidelines or codes. It's also about how you work with the constituents of the market and build capacity and work together. And then it's also about how you work directly with companies, for example, which is the firm level activity that I explained, to make sure that companies are also implementing and following through. So that's just to answer, I think, the lady's question. The second question, which came from the gentleman, was, I think, multifaceted in that I think you raised a very good point around how is the public sector represented and how participatory is this process. I think hopefully my answer just now speaks to that, in that we do want this to be a very participatory process. We do have certain deadlines we have to stick to. So it is a 1-year timeline that we have agreed with our donors, because actually these programs are also funded, and not just by the IFC, but by donors. So we have commitments to donors about delivery of the program, and it needs to be delivered by 2025. So I think this year and 2024 will be the key years to work with the key participants. And I think to the gentleman's question, key participants is also about how we are engaging with the public sector to take into account what existing standards and practices are in place, but also what is needed that is different for the private sector. Because I think to emphasize that again, the IFC focuses specifically on the private sector. And so I think hopefully that answers that part of the question. I think the second part of that question was, is there one standard or are there going to be multiple, for example, sectoral standards or codes? So the answer to that is that there will be one code which we are developing in partnership with ABBE, that will be mandatory, that applies across the whole country and across all sectors. What will come after that or following that, what comes out of the ESG code is the ESG guidelines that I mentioned. And there will be 2 ESG guidelines. One is specifically for the banking sector. And that's where, for example, I mentioned we've partnered with the Bankers Association. And the second one will look at manufacturing and agribusiness. And there we have partnered with the Addis Chamber of Commerce. Those at the moment are being proposed as voluntary guidelines. Guidelines are usually voluntary, whereas the code is mandatory. However, I think that is something that we are taking on board and processing, because I think even within our working group, there are mixed views as to whether, for example, the ESG sectoral guidelines should actually become mandatory. But for that to happen, I think we need stronger engagement from the government and regulatory bodies on what that would look like.
So thank you very much, Fassil. I think the question that was addressed to me is already there is some assessments on environment which is ongoing in Ethiopia, but then here we are talking about ESG. So if there is any difference, and what is the difference? So I'll start with the assessment. So from where I sit, assessments usually happen after the fact. We have to check with the guidelines whether this project or initiative is actually going to comply with the ESG standards. So that one starts from the beginning. It's the same instance where when you're raising capital, in the conventional way, the capital is raised and then utilized based on how projects come along from the company, whether it's expansion or in any other context. But for sustainable projects, you have to identify the assets before you can actually raise the capital, and the criteria which is for identifying those assets need to be met. You cannot say that this project will meet the ESG requirement if it is not meeting the criteria. So I think that is the major difference. It's not very clear because right now there is no oversight or regulations, as we've seen that the code is being developed. So this one becomes clearer when there is oversight and regulation by the respective authorities. But I think the main difference between assessment and the ESG standards is what has been happening in the past is after the fact, you are checking whether this is actually meeting the initial requirements. But with the ESG, this is going to set an initial kind of guideline or standard where before even you start an initiative or project, you have to see whether it actually meets those criteria.
The role of the working group. I think the working group is very diverse in terms of representation from the public sector as well as the private. So what we're hoping to do, it has a very important role in making sure that the code looks Ethiopian, as discussed. No? So within that then, like I said earlier, so the development partners, once we have the code in place by early next year, we would look into perhaps a possible roadmap, which will agree with the working group for adoption and implementation. You know, Abe, by now, we're very good with roadmaps, right? We've done the IFRS roadmap, and then we're looking at IPSAS roadmap right now. So perhaps, you know, a staggering who should be required first vis-a-vis, like I said, it's pretty new in the ecosystem, so increased capacity building and awareness creation by IFC and other FSD Africa perhaps, and then look at which companies should comply, and then enforcement will come through. So Abe's role will be to make sure, agree with the working group what a potential roadmap would look like before enforcement measures. So we'll also discuss whether it's like, this is the code, so if you don't comply, is it enforcement or is it explained as other jurisdictions are doing?
I guess maybe just a comment on the assessments, and I think that has been posed. I think what we are seeing is, and I'm just speaking from what has transpired in other markets in the East, in East Africa. What we are seeing is ESG is a broader concept, but you still find those assessments fitting in very clearly, you know, playing a very big role in organizations or businesses trying to meet their ESG requirements, either coming through regulation or otherwise. I give a very short anecdote. So there was a climate bill in Kenya. Part of that climate bill requires carbon projects to have those assessments done. You know, so it goes back to, you know, I think the concerns that were expressed, you know, regarding how everything fits together. There is actually a very good place where those assessments and expertise actually come to help organizations and businesses. So you find even as they go ahead with carbon capture, carbon reduction, carbon avoidance projects, those normally require assessments in different climes, and you'll be required to conduct such assessments. So you would still find that overall, those assessments still play a very critical role, you know, in many of the ESG journeys for organizations.
Thank you, Yemi.
I just wanted to talk on the data,
Go ahead.
data query. I guess my response will be to take a step back and then answer a few questions on, you know, understanding the data and the challenges based on the request, the query. The first thing is to understand what data we need to capture. So you will find that will vary depending on what we want to measure. Then gain an understanding of where that data resides within your organization. You know, what team, what area of the business, what area of the organization does that data reside? And then next is determining what tools or systems or solutions you require to capture, to store, analyze, report, and potentially assure or verify that information. And there are various tools available globally, locally, that have also been applied. I'm happy to speak about that later on as well. But there are tools that can be applied once you've determined what information needs to be captured, where does it reside, and then determining how to work that journey on efficiently capturing the data that you require.
So obviously, you know, I started my initial conversation earlier by trying to make sure whatever code comes out of this or whatever standards come out of it are aligned with Ethiopian values and culture. That was the example I was trying to get. Obviously, I didn't do as good a job as I thought I was going to do here. So to answer Ato Tolde's question, I mean, one is recognition. Obviously, there should be a recognition of what's already on the ground, and then anything done should be, you know, that should be the base, the initial kind of starting platform. I mean, that's a given. But this project is just starting. So I think, to assume that that recognition is not going to happen might not be fair to the process and the people working on it. So having said that, obviously any policies, ESG policies, any kind of policies have to be, for them to have any impact, they're going to have to be aligned with the country, what's on the ground, how we work, how we see ourselves, and what we value. But at the end of the day, any code that comes out of it would be of a caliber of international standard that international investors can look at it and say, okay, I understand what that means. At the end of the day, that's what we want, especially at the capital market as a regulator. Investors should know what ESG looks like based on our code standards. It could be a foreign investor operating in Kenya can come here and has a basic understanding of what we're trying to do, what ESG disclosures look like. And I was thinking about an example just to supplement this conversation with Fassil earlier. So I thought maybe I mentioned that. I thought it would be a good example. So one excellent impactful ESG using kind of area of investment in Ethiopia currently on the ground is to look at some of the private sector coffee operations, the coffee farms that are exporting directly. So some of them in Western Ethiopia currently are actually designed around ESG. They don't have kind of certifications that say this is the ESG, but if you look at how they're designed, from initial kind of design of the farm, what they've been doing, how they've been manufacturing, it's amazing. I mean, I think that's an area that we should look at and understand. Some of them, coffee on the international market is trading around $1.60 a pound. Some of these institutions designed around ESG are starting auction at $25 a pound. It's around 20 times the value. And they literally have environmental policies, social policies in terms of providing all workers, education, health facilities, training opportunities, growth opportunities. So, this is doable in Ethiopia. It's currently in market. I don't want to cite specific, names of these companies, but easily available online. You can look at them. Actually, one of these farms, I think last year or the year before, sold a pound of coffee, the highest price ever sold from Africa. I think $120 a pound. So, obviously high impact, it's part of their marketing scheme as well. So high impact in terms of if we do this right, we can change a lot of investment opportunities and marketing opportunities. Thanks.
Excellent. So with that, we are wrapping up today's session. I would like to thank Vice Governor Eyob for your keynote speech and for your presence here out of your busy schedule. As FSD Ethiopia, we're excited to be partnering with ABE and IFC and sitting in the working group as well to help develop and codify the ESG standards and frameworks. Thank you all.